CFD broker information and comparisons. Contracts for difference is essentially a type of trading that allows traders to buy and sell goods without physically owning them. Under a CFD agreement, the seller agrees to buy an asset provided that the difference between the current value of the asset and its value during contract time is positive. If the difference is negative, then the seller will have to pay the difference to the buyer. CFD trading allows the trading of assets, shares, commodities, or event stock indexes. Contracts for difference relies heavily on price movements, as investors will have to speculate on predicted price movements before they can invest on a particular asset. It is worth noting that investors on a CFD agreement need not own the asset, as the CFD owner will receive cash dividends as compensation for participating in the trading activity. This type of trading has gained so much popularity in many markets because it allows investors to profit without necessarily having to put out too much money in the market. CFD brokers typically earn a commission of 0.10% up to 30% depending on the agreement. The buyer is typically the trader or investor and the seller is the CFD broker. Under a contracts for difference agreement, contracts are traded rather than the actual commodity or asset. There are a lot of risks involved in contracts for difference, but since it is relatively lower than other types of trading systems, it is preferred by a lot of investors. It is also preferred by those who don't have much capital to invest in particular markets. Both traders and brokers can potentially profit a lot from this type of trading system, provided that the market prices move to their advantage. Contracts for difference is a short-term investment, as it is the CFD broker that finances the trade. Anyone who wishes to participate in CFD trading has to find a CFD broker. Since commissions vary per broker, it is imperative to take the time to compare different brokers. You will have access to different CFD brokers, depending on the market that you wish to invest in, though it is important to stick to markets that you know quite well, as it can be rather difficult to speculate price movements without proper knowledge of the particular market. Since CFD agreements have its fair share of risks, it is important to look for a CFD broker that you can rely on. Nonetheless, contracts for difference is a good alternative to other types of trading instruments that require higher investments,